And it's that time to go around the world of business on Business Incorporated. It's going to be a 55 minutes journey. Let's do it together. Here's what's coming up on the program today. West and Central African finance ministers met today in Abuja. What are some of the core of their conversation? We'll bring that to you. And with the continuous blow on the Zimbabwean dollar, they are planning an overhaul of exchange policy. How will that look like? And in Kenya, it might be a bit of relief for residents right there because they are set to have a reduction in their electricity bill. Welcome to the program. I'm Ini John Mekwa. Well, let's start off this afternoon with what we had, the conversation we had in the morning. Remember, we had the Chief Executive Officer of Financial Derivatives Company, and we were talking about that order from a court in Lagos that prices should be fixed. The federal government should fix the price of food, some commodities, in 7 days, and he had this to say.
From a macroeconomic perspective, the reality is that if you fix prices, then the laws of demand and supply break down. And if you have an open market system in terms of reform and all of that, and you want investors to come into this country, you cannot fix prices. Therefore, it's totally inconsistent and incompatible with macroeconomic principles in modern day economics, and also it is inconsistent also with the investment-led strategy which this country has embarked upon over the last few years.
Now let's go to the global space now for grains. Chicago beans futures declined on Wednesday with the market's focus on higher production in Argentina, while corn, let's look at the numbers right behind me. There we see that wheat is down 0.5%, $5.99. That's where it settled. And also soybeans down 1% at $11.88 for a quarter of a bushel. Corn also dropped by 1% and settled at $4.33 for a 3/4 of a bushel, mostly driven by weather, as we can tell when it has to do with crops. And Argentina's main farmland will receive significant rainfall over the next few days, Buenos Aires Grains Exchange had said, and adding this should boost the country's current soybean. Recent weeks, Argentina's top agricultural areas have experienced mostly dry conditions and high temperatures during the southern hemisphere summer. Now, let's also look at what's going on with oil prices. Extended gains on Thursday after Israel rejected that ceasefire from Hamas, while a weaker dollar also added to prices. Brent crude futures rose right there. We see it's up at $79.51 a barrel, went up 0.4%. WTI also went up 0.4% at $74.12. Once again, a major booster to this is that rejection by Prime Minister Benjamin Netanyahu to the ceasefire, even though the United States is saying, well, there are other fronts that will be explored to bring peace and calm the tension right there. Well, still talking about something close to oil, Nigeria's crude oil production has seen a steady rise in recent times. OPEC is due to release its monthly oil production data on February 13th. And we'll talk about what we should expect from that. We're going to have that conversation on the program later on today and find out what we should expect from that meeting. And also, of course, you know that the new discovery, talking about here in Nigeria now, the new discovery of the Akpo land field with a production of about 14,000 barrels per day from the Akpo West field. That should increase the production and help the country's revenue. So we're going to delve into that later on the program. But for now, let's see what else we can have on the program. Heading over now to Berlin and see what's happening there. Or rather, let's head to Abuja, where that finance ministers meeting we told you about. The finance ministers made up of West and Central African finance ministers alongside the World Bank Group. They convened earlier today. The meeting is over in Abuja to address key development priorities. And the meeting hosted by Nigeria's finance minister, Mr. Wale Edun, and World Bank Regional Vice President, Mr. Osman Diagana. They gathered, over 50 ministers gathered, as well as their partners, their development partners, with discussions focused on economic growth, trade, inflation, foreign exchange challenges, which is quite common on the continent. We just talked about Zimbabwe, inflation, strategies to tackle hunger and poverty. Well, this pivotal gathering reflects a commitment to addressing multifaceted challenges in West and Central Africa, signaling concern and a concerted effort to promote prosperity and well-being across the region. The outcomes of closed-door meeting seeks to shape future policies and initiatives, emphasizing regional cooperation in addressing shared challenges and fostering sustainable development consumers for the residents of these regions.
We're here to discuss that funding. We're here to discuss electricity access. We're here to discuss social safety nets, digitization, and generally the major issues that affect poor countries and the major role that the World Bank as a trusted development partner can play.
All right, so now that meeting was held earlier today. I will get a full report. You just have to stick to Channels Television. We'll give you a full gist of what the ministers, very strong individuals there, finance ministers from Western Central Africa, meeting there to talk about, of course, common challenges which a lot of countries on the continent are facing at this time and prefer a solution to it. So you don't want to miss that report. Watch out right here on Channels Television. And talking about our major source of income, let's bring you back to that story about OPEC. OPEC meeting is holding next week, February the 13th, the day before Valentine. That's on Tuesday. And, well, we do know that there's a lot of expectation from Nigeria and other OPEC members. But let's look at Nigeria, to see what we're expecting. Now we have joining us right now to tell us some of the things we could expect from this meeting, to tell us what we could expect from the meeting, as well as what Nigeria could be looking forward to this afternoon. And good afternoon.
Hi, Ini. Hi. Good to see you again.
Yeah. So, well, I guess we should start with the good news. This field, the new oil field that we have, and which should help Nigeria boost production. What do you expect from there?
Great question. So I suppose you're talking about the Akpo West oil field. I mean, it's a really exciting prospect for Nigeria. We've come out of a couple of years of deep challenges, around crude oil theft, which is one, but also pipeline vandalism. These things combined have meant that a lot of oil companies have refused to invest in the Nigerian oil and gas sector because of all the risks that they perceive in that space. Now, Akpo West is a fresh and new, oil field that, by all indications, has substantial resources, oil and gas resources in there, but also, very favorable in the current climate. We have a new government who have come and they're pushing up production, and I think they can very quickly take this field from sort of currently where it is into development in a very short space of time. So overall, extremely positive, extremely upbeat. In fact, I've got to say this, that it's not just Nigeria that's seeing lots of successes in this space. We're seeing some successes as well in the Namib Basin, which is starting to become very, very, very mature. Last couple of years, they found, lots of discoveries. So it's great to see Nigeria coming back into this space.
Yeah, but the discovery is fine. We applaud it, but some people will ask, what have we done with what we have? Because we still have to deal with oil theft. Else, this would just be another revenue or making platform for the thieves.
Yeah, 100%. I don't disagree with you at all on that sphere. Extremely blessed, lots of resources, without a doubt. Have we maximized those? Unfortunately, we haven't. We haven't maximized those resources, as you can imagine. In the last couple of years, you would have heard it from Mele Kyari, who said it over and over again, that we're losing up to 200,000 barrels per day to, oil and gas theft. But I think the good thing about it now in today's world is the fact that NNPCL have just launched, actually not just launched, a couple of months ago, they launched a crude theft tracking app. And so far, there have been lots of successes because it has to do with the communities there. Lots of the communities would see something and they'll report it. And a lot of the successes you saw in the last few where people were caught, bunkering and, all the vessels that were arrested, much of those were products of the new app that was just launched. So on other fronts, I'd say great successes. We're making steady progress, which is why we're going from 1.2 million barrels 1.2 million barrels per day, about a year ago, to where we are today, about 1.5. And I think that needs to be celebrated.
So I guess it's too early to expect this to be part of the conversations at the OPEC meeting next week. They will just give us our performance in previous months.
Yes, 100%. If you're talking about the field, the oil and gas field that's been found, you're 100% right. That's way too early. It's just a discovery for now. We just found oil, so that wouldn't form part of it. What will be really important, without a doubt, are the steady efforts curbing some of these oil theft and vandalism, and how we're seeing steady growth. So if we go back to November, Nigeria's crude oil production was approximately 1.3 million barrels per day. Okay, so quite modest. In December, we went 100,000 barrels higher, 1.4 million barrels, which is really encouraging. In January, it's gone, slightly higher up again. So we're anticipating this to see that Nigeria will be gaining market share. There will be an increase in market share for Nigeria. But the fundamental question, again, which remains is, what are other OPEC players doing? We saw a couple of weeks ago the Saudi cut back in terms of capital deployment. Would they put capital in that sort of, into new oil and gas developments? They've pushed back from doing that, and we've seen a couple as well. So I think there's certain areas where we'll see, huge movement and, in that regard, without a doubt.
So you don't think we should be so excited about the 1.7 target that the Minister of State has set for Nigeria?
No, I think there's a couple of things there in it. One of it is the fact that, without a doubt, there should be huge optimism, because we've seen a situation where these investments have worked, powerfully. Like I said, we went from 1.2 million barrels per day. That's increased very steadily all the way to where we are today. At 1.74 is not that far away. In fact, if you ask me, I think the target needs to be a lot more ambitious. Nigeria can produce 2 million barrels of crude, quite easily and comfortably. And I think setting a really high target would allow us to get to that 1.74 that people are touting. But it needs to be steady progress, like I was saying. We've seen us go from 100,000 barrels per day, which is on one side of it, and it increased steadily all the way to where we are. I do think there are lots of gears that we can shift to get to 1.74 and even 2 million barrels beyond that.
So you some time ago mentioned about the Saudi, their strategy, which is that they are doing production cuts now, obviously to try to boost prices and all of that. So each country should formulate strategies that will, favor their economy. As we go into the meeting, what should be Nigeria's strategy in the face of our realities?
So we need a couple of things to bear in mind there, just before we go into it. Saudi Arabia, obviously, yes, one of the members of 13-man OPEC group, without a doubt, yes. But Saudi is the leader in that group. Saudi has been a country traditionally that has dealt with, all of the increases. So they have the spare capacity, they raise production as required or cut it back as required. So they played a balancing role in the market space, if you see what I mean. So them deciding not to put up capital for further expansion, it's a bit different, though. It's a bit different from what Nigeria is. Nigeria, you can argue, we are, give or take, call it 1.6 million barrels, per day, generally, on average over the last couple of years. Our role has been slightly different. Of course, we're a very important OPEC member, but we are not the dominant player in that space. So the strategy that Nigeria would deploy would need to be a bit different, a bit like what you saw with Angola. 3 months ago, Angola, being part of OPEC, elected to come out of OPEC, and their production was about 1.2 million barrels per day. The reason why they elected to come out was because some of the policies that we're seeing in OPEC was not favorable to them, because it's not just OPEC who's dominating the market today. The US, you can see production coming from the shale players in Dakota, North Dakota, and other parts of the US. And all of these guys are coming, putting new barrels onto the market, and those barrels, as you can imagine, is depressing the price of crude oil. And so if you're a small player in that space and you do not have a great capital strategy for you to invest in, earn revenue from that, from oil, then very quickly you'd see that the strategies being deployed benefit the high market players, and you could get squeezed. So I think that's the sort of thing that we saw. Some of the situations, the policies that were being deployed were unfavorable to small players, but without a doubt, Nigeria needs to think very critically around how it deals with the changing landscape of the marketplace.
Is Nigeria pulling out any time? Would that be of any good to the country?
No, I'm not at all suggesting that Nigeria should move out. That's not the point I'm trying to make there. The point I'm trying to make is smaller players, some of them have had to do that. They've elected to do that and had to move out of the market space. The point I'm making is, Nigeria stands at a very critical juncture. There's huge capacity for it to increase its oil and gas production in a very short space of time. We've traditionally come over the last couple of years, maybe the last 2 years, I'd say. In fact, we went down to about 900,000 barrels per day. Okay, so if you think about that, all of that spare capacity Nigeria could have produced and the opportunity cost of what we've lost in that space, it needs to clobber back very quickly. So if I was the representative, Nigeria's representative in OPEC, I will be sitting down very candidly and trying to see how we can push Nigeria's oil production over and beyond so we can fill that capacity. So just to put this out, actually, Ini, total OPEC production today, as we speak, is about 26 million barrels per day. If you go back to November, total OPEC production was about 27, about 28 actually, million barrels per day. So OPEC is being squeezed itself. OPEC is being squeezed down because there are new entrants in the market. The US is coming in and putting additional barrels onto the market space, and that's challenging everyone, and the oil price is decreasing. Nigeria needs to think strategically about that. It needs to think that, we need to fill that capacity. We need to go back to, 2 million barrels per day, which is where we were a couple of years ago, because that will bring the foreign exchange that we need. And of course, you know this. If you look around where we are today in Nigeria's economy, there's huge inflation. There's ravaging the entire economy. Why is it doing that? Mainly because foreign exchange is very constrained today. Oil and gas is one of the areas that brings a huge amount of foreign exchange to Nigeria, and if we earn that, we bring a bit of market stability and hopefully, help with the massive inflation that we're seeing in Naira.
Just before I let you go, I'm just curious, do you think one day OPEC will not be so relevant or so strong anymore with all of these changes?
That's a great question, Ini, I've got to say. So this question was partly answered in 2014. The question you just asked. So in 2014, just to put this out there, the price of oil is about $120 per barrel, 2018. The shale producers, mainly in the Bakken area of the US and the lower 48, started to produce crude oil and putting those onto the marketplace. There was an oversupply. Okay, so there was an oversupply of crude oil in 2014, and because of that, crude oil plunged very, very quickly. Now, when it plunged very quickly, there was that whole thing around, well, would OPEC cut oil supply? And OPEC did cut after a while. It cut down its barrel on the marketplace. But the more OPEC was cutting, the more the US was filling that capacity. quite frankly, we are in exactly that situation today. It happened in 2014, it's happening again. There's an oversupply that's gone on onto the market, even though a lot of that capacity, or those barrels that are being put up, are being taken off. The pressure on price, you can see that. A month ago, 2 months ago, we're $87 per barrel. We're $90 per barrel. Today, we're about $80 per barrel. And much of that is the pressure of oversupply that's coming in. So to your question, OPEC has consistently been the market balancer. If the world needs more oil, OPEC produces more. Saudi Arabia increases capacity. If the world needs less, it cuts back on oil production so it can stabilize the price. Unfortunately, or fortunately, however you look at it, that role is being played by the US producers today. They are filling capacity. OPEC is trying its best, but they are also putting barrels on the market, and it's changing the dynamic quite a lot. And you would know this, for the very first time in a long time, the US is the highest producer, crude oil producer in the world, 13 million barrels per day, even higher than Saudi. Saudi is approximately 12 or 11 million barrels per day. So this just shows you how the market is changing very rapidly.
Yeah, change, you say, is the only constant thing in life. Well, thank you so much for sharing your views and insights with us this afternoon. Chinan Dikwo, the energy expert, and the Vice Chair, African Energy Council. Thank you so much.
Thank you very much for having me, Edie.
Attention is moving from our all-excited NGX to the fixed income space. Well, let's have Will come in and tell us the details. Will, so now this will be a test. Yes. We'll see investors
loyalty
who will be loyal to the NGX in spite of the bad times, or those who will shift grounds. So when they try to come back to the NGX, we'll shoo them away.
No, but there's something they say. Money does not have loyalty. It just goes to who gives it a better return. So
investors do not have loyalty.
Yeah, please don't hold your breath. So let's begin with markets in Africa, where major equities were trading mostly in negative sentiments at intraday. Nigeria's NGX was down massively, 1.27%. It has fallen below 102 points, now at 100,000 points. And our analysts did say that we should expect a correction, and it was imminent, and here we have it. South Africa's GSE also in the red, was also in the red at intraday. It was 0.31% down, still at the 74,000 level. But let's look at Egypt. The EGX was up at intraday. That's a bit of a green light, shining light for this red sea we are seeing for major equities in Africa. 1.33% up at 28,277 points. Still that uptrend. It's moving, possibly going to reach the 30,000 points very soon. And Kenya closed Wednesday's session in the red, 0.68% down. But let's find out what's happening. Let's delve. A lot has been happening in the FMDQ space. That's the fixed income market. We're seeing the fixed income rally in this period. But the DMO, let me just start off with that. DMO on Monday announced a 1 trillion total offer across maturities worth 400 billion naira, but we did see a shift in what they do. They changed what they had to. Usually they just offer what is supposed to mature, but right now we saw them sending a letter that it was going to be 1 trillion naira going to be on offer. That we also saw that jump in stop rates. But we're going to be talking to Caleb Alimi, his chief dealer, Providence Bank, to share more insights as to what's happening. Good afternoon, Caleb. It's good to have you on the program.
Good afternoon, Willow. Thank you for having me.
Let me just continue from where I was starting. First of all, is it a normal thing for the DMO to write to announce a change in offerings for the market?
It's not normal, but it's within the purview. The office of, the debt management office is within the purview to determine what they want to float per time. But it hasn't happened in a long time. I haven't actually seen it in my own time where a particular NTB option, what was maturing, what was offered. This was the first time where 417 billion was maturing. However, the total size of 1 trillion was on offer.
So, how did the market interpret this DMO's announcement, particularly in relation to expectations for interest rates?
Market interpreted it, simply as a signal that rates were going up. I mean, the last stop rate, closed at 11.54, and what was on offer was just around 200 billion. And now you come to offer 1 trillion. Market clearly saw it as, higher interest rates, and that's what happened. We saw stop rates move on the 1-year paper from around 11.54 to 19%. So market interpreted as more supply means rates are going to go up, and that's what we've seen across all three maturities. On the 91 day, there was a jump from 5% to 17%. On the 182 days, there was a jump from 7.15 to 18%. And on the 1 year, there was a jump from 11.54 to 19%. So the DMO called and the market listed, more or less.
So just let's dig deeper. Can you explain the rationale behind the Debt Management Office decision to announce this 1 trillion total offer across the three standard maturities? What are the objectives? What are they up to here? What do they hope to achieve with this? Some say, let me just say, it's to attract the dollar.
Okay.
Can you say that is true?
Well, interestingly, we're getting some interest from, foreign portfolio investors who will definitely bring in the dollar. So yes, it is possible. The tools that the CBN and the DMO have at their disposal is largely interest rates. And so if your exchange rate is weakening, what you have to do is also you move your interest rate to attract further investment. And that's what we've seen them do. We think there's a lot of foreign interest in this auction because the yield, which is the actual return on this investment, is around 23%, which is pretty decent. So we think there is a lot of foreign interest in it. I think that was part of the objectives for floating this sort of size.
And so could you elaborate more on the current liquidity conditions in the market and how they've influenced the movements of interest rates? Could you shed more light on that?
Also, among the banks, it's pretty difficult. Market was slightly positive yesterday, but today, because of the 1 trillion that the DMO has sold and will leave the market is about 390 billion negative. We would see interbank rates, which is borrowing rates among banks, will probably go up to around 24-25%. Yesterday, interbank rates were around 17%. But we think with this outflow, over 600 billion additional to what matured, we'll see interest rates go all the way to around the 24-25% among the banks.
Okay, we're still speaking of interest rates. We have inflation rates at 28.92%. That's quite high. How does real returns here, approximately that's from what the DMO has offered, which is a -5%, affect investor sentiment and decision making?
I think it's hugely positive for investors, and I think when you cover the NGX market, you should see it downturn on that side, because a lot of them will sell risky assets and come to risk-free, because risk-free is now doing a yield of around 20 to 23%. So at -5% real return, that is very good for the investor. We haven't had that in a long time. Before now, we used to see real return around the -10%. So, -5% is really, really good for the investors. I think a lot of people will take a bet on Nigeria at this point. I think we'll see more investors leave the equities market and come to the fixed income market.
I was going to say that is that why we're seeing that dip in the equities market? Are they now already moving to the fixed income market? What are the numbers saying in the market currently?
Possibly one of the reasons, I don't have coverage of the equities market right now, but I know it will be one of the reasons why there's a downturn in that market. Will be people are ditching risky assets for risk-free return.
No, I mean in the fixed income secondary market. What are investors buying? What are they buying?
Asset managers and pension fund administrators are lapping up the 17% yield. We've actually seen this 23% yield. We've actually seen discount rates drop from around 19% to around 17%. And we expect it to continue to drop further to maybe a 16%, because all of that yield is still very, very good for asset managers and private wealth managers and all of that. So yes, there's huge investor appetite for the securities.
Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing those insights on Business Incorporated. Quite interesting. We'll keep a watch for what's happening in the fixed income and the equities market space from now on.
Thank you.
So we'll move on to the Middle East, where trading for major equities was mostly positive at intraday. Abu Dhabi was up marginally, though, 0.02%. We also saw a similar margin for Dubai, 0.02%. Now, still within the region, Saudi and Qatari indexes traded in opposite directions. We saw Saudi up 0.3%, but on a third of a percent. And then we saw Qatari index 0.29% down at intraday. Now, moving to the U.S., we saw stock futures were little changed early on Thursday after the S&P 500 finished regular session at the brink of the 5,000 milestone. Futures linked to the Dow Jones was up 0.4%. We see S&P 500 futures was up 0.82%, and the Nasdaq futures was up 0.5%, nearing the 1% levels. Now, Disney shares, we'll talk about some of the earnings or the effect of earnings have been coming in. Disney shares surged about 6% in after-hours trading as the media giants beat quarterly earnings estimates and raised its guidance amid its cost-cutting efforts. Now, chipmaker and designer ARM also saw shares jump a whopping 23% after the company reported stronger than expected earnings and gave an upbeat profit forecast. We saw big tech Meta also surging another 3% on Wednesday, while Nvidia and Microsoft rose about 2% each to fresh record highs, and that bumped the Nasdaq index up. And tech stocks have been doing so much now, but investors will be keeping an eye on jobless claims data, which will be coming out later today to gauge the health of the labor market. Let's check out how Asia is doing, how they closed today. Japan's Nikkei 225 led gains in that region on Thursday, hitting a fresh 34 high. We saw that index jump 2.06% to close. And it comes after the report that the central bank would not aggressively tighten its monetary policy. Now, we see Kospi in South Korea also up 0.41%, and the Hang Seng Tech Index index in China was down 1.27%. Let's look at China, the mainland China, Shanghai Composite, what it closed at for today, 1.28% up. And we see S&P ASX 200 in Australia also closing in the green, 0.31% in it.
Yeah, well, a mixed sentiments we see there in Asia, and the market is already closed. And
very, very, very positive for some, and then some of them, like you say, it's good for some and it's bad for others.
Yeah, do you see some Nigerians running into market like this
at
this time when the NGX is receiving some knocks on?
Possibly, they might just be looking for where to put their money. And right now, they will just all run to the fixed income space where the capital is preserved and they also get good returns.
Yeah, but after business morning, I had a conversation with one of our colleagues, and we're calculating, with the interest rate, the yields rate for the fixed income. You have to be very patient because, it's safe investment, but you don't expect to get
the kind of returns you get with equity.
Exactly.
So you have to have enough appetite. Your risk appetite has to be really high for you to want to push your money. And if you go to stocks like, the Nvidia and the rest of them outside the country, I'm sure you get that return, but you just have to be ready to know that you could lose your money as well.
Yeah, the higher the risk, the higher the yield. All right, thank you so much, Will. All right, let's head to London now, where Juliana is standing by. Hi, Juliana. Good afternoon. Well, a U-turn. That's how the newspapers and all of that are reporting this. The green investment promised by Labour. I wonder how this is going to affect sentiments around them, and what else they want to do to please the British.
Good afternoon, Annie. Well, we're just going to have to wait and see what happens when we head to the ballot box. But I think it is quite embarrassing for the Labour Party, led by, of course, Sir Keir Starmer, who, according to polls, will be this country's next Prime Minister. And that is, as you said, there are hints that perhaps the pledge that they made in 2021 to spend £28 billion a year on green initiatives may not happen anymore. It was a flagship policy by the Labour Party, announced by the shadow Chancellor of the Exchequer, Rachel Reeves, at their conference. But of course, so much has changed since that time. The finances of Britain have changed and evolved, and a lot of people were asking the Labour Party to be much clearer when it comes to their economic strategy. And I think that £28 billion figure was probably too risky for them to put on a mandate when they are knocking on doors, trying to solicit voters' opinions. And I think, yes, that's probably what it is. I think when Rachel Reeves did make this announcement a couple of years ago, Boris Johnson, of course, was the Prime Minister. And there is quite a stark difference, I think, between Boris Johnson and Rishi Sunak's pledges for the environment. At the time, we had COP26 taking place in Glasgow. Antonio Guterres, the UN Secretary General, was really talking about the climate emergency as something being incredibly significant, that if we didn't act now, of course, future generations will suffer. So the mood music around that time was for more in green investment, including making sure that there were viable jobs within the green sector, making sure that the country had enough gigafactories to charge electric vehicles. And I think Labour really rode on that train. Since that time, we've had the war in Ukraine. Energy security has been a massive interest to this administration. Rishi Sunak, not so green as his successor was. And so I think Labour have realised that perhaps spending so much on green investment is not really what the country needs. What the country needs at the moment is investment in other areas. That's what the critics are saying. So yes, an embarrassing U-turn. But if we look back over the years, I think the Conservative Party have done more U-turns than the Labour Party, but embarrassing nonetheless.
Yeah, well, I guess it's up to you guys there when it's time to vote to see which of them have done more and which one we can endure better. But let's look at the market as intraday. How's that looking?
Tip-top shape at intraday. The all shares up. It's trading up by 0.36%. The FTSE 100, the UK blue chip index, that's up by 0.31%. And the FTSE 250 is doing very well today. It's up by nearly 1 whole percentage point. In the currencies market, the British pound still increasing its rally against the US dollar after a downturn. It's up by 0.06% at intraday, although the pound is down against the euro by 0.02%. It's trading up against the Japanese yen by more than 0.5% in a.
Yeah, thank you so much, Juliana, for that update. And so not too far away from Juliana, we head to Berlin in Europe, where the winter of industrial action continues. We talked about that yesterday, that strike that is going to be affecting the airlines. And now, of course, we expect that to spill over to industrial production. And we see that that is in its longest ever downturn with all the strikes and all of that. The ongoing decline is now worse than seen during the 2008 financial crisis. But let's let's talk from there now. Chiponda Chimbelu joins us with the details of this seemingly unending downturn in production. Chip, what can you tell us about this?
Thanks for having me, Inni. The latest figures show that Germany's industry, construction, and energy sectors produced 1.6% less in December than they did in November. Now, this is the fourth decline in a row and the steepest one since March 2023. The decline was also much bigger than forecast by analysts. The most significant declines were in energy-intensive industry and energy production. Energy is the Achilles heel of the German economy. Now, since Russia invaded Ukraine, Europe's industrial powerhouse has been struggling to find alternatives to cheap Russian gas. So the decline in energy production is hurting the country's industry. While the government announced its plan on energy on Monday, it will take some time for any new power plants to be connected to the grid. And some experts have been critical of the plan already. They say that the 10 megawatts of additional energy that the government is adding in the coming years isn't enough, especially if the country plans to switch off its last coal power plant by 2030.
So why does it seem like it's so difficult for Germany to handle this and move out of it?
Well, some experts say that Germany is facing a poly crisis. So it's not just the energy crisis, it's also demographics and the high interest rate environment hurting businesses, especially the construction industry. Now, that is a sector that the country is especially in need of right now. Germany needs at least 700,000 homes, according to one study released last year. Rents are rising, and so are food prices. Germany's economic slowdown has coincided with a cost of living crisis. And the fact that the government doesn't appear to have answers isn't helping. The ongoing discontent with the government may be one of the reasons that the country has seen growing support for the far-right AfD party. And that's a trend that corporate Germany is watching with alarm. Businesses fear AfD's anti-immigration rhetoric could make Germany less attractive for skilled workers, which of course it desperately needs as more and more Germans go into retirement over the coming years.
Anyway, let's look at the market now. A lot of stories right there. How's that looking?
Well, European stocks are expected to trade higher today. Beijing's rollout of measures to revive the equity market has helped sentiment. But there may be trouble brewing in the commercial property sector, with problems from the United States spilling over to Germany. Deutsche Pfandbriefbank released an unscheduled statement on Wednesday. The bank said it had further increased its risk provisioning in the fourth quarter of last year due to persistent weakness of the real estate markets. Traders will also be keeping an eye on fourth quarter earnings from German industrial giant Siemens and pharma giant AstraZeneca, among others.
All right, Chip, thank you so much for the update. Let's talk about one source of protein that's of interest to mostly children, but of course adults also have not been left out of it, especially back home here in Nigeria. Talking about eggs, do you know that the price of eggs has increased about 17% this year only? Perhaps I don't even need to tell you. I'm sure you're already feeling it, especially when you have the children and you have to ensure that they do have a source of protein in their diet every single time. Let's talk about this and much more. And we know that the Ramadan is just around the corner, so more demand might mean more increase in the price, but I don't know. Well, let's talk to Miriam Ode now. Miriam is an analyst with Financial Derivatives Company. Hi, Miriam. Good afternoon. What's happening to the eggs? I know that last year, poultry farmers said they lost about 3 trillion naira. Are the losses extended to 2024 yet?
Good afternoon, Ini. Thank you for your question. So, in relation to the price of eggs, egg prices have actually gone up, like you said, to about 3,500 naira for a crate of egg. And this is mainly because of the Ramadan season that is fast approaching, like you mentioned, because we know that about 50% of the Nigerian population are Muslim. So the increase in demand as they stock up for the season and for the fast will definitely affect the price of eggs and cause them to rise. But then there's still some hoarding factor that is playing into the price of eggs, because most poultry farmers know that, yes, during Ramadan season, the price of eggs skyrocket. And so they are trying to keep some of the supply of eggs limited, so that when the Ramadan season approaches, then they can make more profit, since egg prices will be higher. And then we're talking about the losses from the previous year. I remember that in May 2023, there were about 20 million unsold crates of eggs, which is a whole lot of loss for the poultry industry. And we're still experiencing egg glut currently. So definitely these losses will still translate into, from 2023, will still translate into losses for 2024.
So I'm just surprised, because we've spoken to poultry farmers a lot of times. They told us how they've had to bury eggs and things like that. In spite of this, there are reports that Nigeria still imports eggs of about $8 billion. Maybe it's not a true report, is it?
It's possible that Nigeria still imports egg, because there's this belief that foreign eggs actually last longer, which may or may not be true. But then there's also the fact that poultry farmers are actually suffering from being able to store their eggs so that it could be able to reach the market and still be fresh. So that's one factor, and even that's another factor that is causing the egg glut. So it's not necessarily that demand is not enough to meet up with the supply, or poultry farmers are supplying more than enough, but it's mostly that there are inadequate storage facilities for these eggs, which cause them to spoil faster. And then there's high transportation costs. So farmers are trying to incorporate, or trying to run off the loss or the higher cost of transporting these eggs from the farm gates to the consumers. And this is factoring into the price of eggs also. And we've even already started seeing that the demand for eggs is already declining due to this, because consumers are price sensitive to eggs. And this is discouraging most poultry farmers from actually continuing or sustaining production levels. So we're seeing that Nigeria still has to import some of these eggs to meet up with the demand, because I know recently I read a report that said that Kano farmers have 85% of poultry farmers in Kano State have actually shut down due to the unattractiveness of the market. And so if we're seeing that domestic supply is reducing, especially in Kano State, then obviously the country would have to import eggs to meet the domestic demand.
Yeah, well, unfortunately, because that also adds to the pressure on the Naira as more FX is needed for that. But thank you so much, Miriam Moody, analyst with Financial Derivatives Company.
Thank you for having me.
All right, looking at other stories now. Following the International Air Transport Association, that's IATA, their latest analysis of air cargo markets for the full 2023 year and for December 2023 compared with the same month in 2022. The analysis, which is based on a cargo traffic and capacity data captured globally and regionally throughout 2023, it shows that there was a decrease in demand of 1.8% for international demand in 2023 compared to 2022, but an increase in capacity, about 5.6% capacity for international operation, and that's for December 2023 compared to 2022. That African airlines posted the weakest performance of all, with a 1.2% decrease in demand for international operations compared to 2022, while capacity also grew 7.4% for the same period. Or the International Air Transport Association released data for global air freight market, showing all of this number. It also showed that demand has rebounded in 2023 with a particular strong fourth quarter performance despite economic uncertainties. And from there, we go to Kenya, where consumers are set to enjoy relief on electricity bills this month, following the latest review of the Energy and Petroleum Regulatory Authority, IPRA, which saw power prices drop by an average of 9.3%. Thank God, some good news on the continent. Domestic customers who've been paying about 32 shillings for 1 kilowatts per hour will now pay 29 shillings per unit this month. The new power prices have takes effect from today, Thursday. IPRA has reduced the fuel energy costs from 4.33 shillings per unit to 4.14. It has also lowered the foreign exchange rate fluctuation adjustment from 6.46 per unit to 3.21. The regulator said the lower prices have been affected because of the lower foreign currency repayment of power purchases made by Kenya Power last month. The forex losses that the company incurs from repaying power costs in foreign currency are usually recovered from bills the following month. And then we move to Mozambique now, where we see that in Mozambique, we see that they're seeking to become one of Africa's biggest hydropower producers, and they're launching a green hydro industry. The government plans to add 14,000 megawatts of hydropower capacity, with the bulk of that developed between 2030 and 2040, according to the government, the transition strategy. And then the hydropower will be set for this year. It said that the document hasn't been released publicly, but works are underway. Let's head to the crypto space now and see how that is doing this afternoon. If we could have the numbers, the crypto numbers instead of the headlines. Let's have the numbers right there and see the price, obviously, of Bitcoin as well. So we see that Bitcoin has recovered a bit, up more than 3%. In fact, more than 3%, 3.63% at 44,698.55. Ethereum also follows suit. Of course, when the big guy is up, then you expect that others will follow. That's why we have more of green right here, just a couple of reds. XRP is up, BNB is up, Solana is up, and all of that. Okay, let's see the sentiment before we head to the headlines. See the sentiment and the prices, if we may. Yeah, so a very greedy market, but remember, as we have been told, that it is a greedy market does not mean that if you try to sell out and pull out at this time that it will be good for you. So you have to really look out for it. So let's see the prices for this afternoon. So there you have it. Bitcoin is back right there, 44,698 and 55 cents. That's up 3.6. Ethereum, BNB, Cardano, and our XRP also is, XRP is also up right there, 2.32%. But let's look at the headlines now, some stories that catch interest, which is the Chinese Bitcoin miners. The miners have been in the news. You know, the halving is coming, and I think it's something that really concerns them. Chinese Bitcoin miners find a new crypto in Ethiopia. Well, I would like to understand this, trust me, and I believe we'll have a guest to tell us. The other is that India's Reserve Bank is looking to introduce offline CBDC. Focus is going to be active, you know, just not just having that. And then Ethereum also achieves staking milestone with 25%. So let's talk about this Chinese Bitcoin moving to Ethiopia with Olumide. Olumide Additional joins us virtually from Berlin. Hi, Olumide. Good afternoon. It's been a while I spoke to you. Happy New Year.
Yeah, same here. Good afternoon. Thanks for having me.
Great. So tell us, what's the implication of this, that Chinese Bitcoin miners have found a new heaven in Ethiopia? What does it mean, really?
Yeah, so what we're seeing in price action is the appetite for Bitcoin. And, you know, recent data from BlackRock suggested that BlackRock ETF, Bitcoin spot ETFs were one of the top interested ETFs on the US exchange market. That does give you interesting insight. So activity around the Bitcoin space is on the high. And you will pretty much understand that the Chinese government clamped down on Bitcoin miners because of the narrative around electricity consumption. And, you know, electricity is quite expensive with gas issues around Ukraine, and the fact that demand for coal also has a greenhouse effect. But interestingly, you know, Ethiopia has one of the cheapest form of electricity. It just designed its dam, and the cost of electricity in that country is quite cheaper than what we see elsewhere. So that has really put an interest in Chinese miners coming to set up in that place. And also the Ethiopian government has created friendly business measures to really push that narrative around investment. So it's not surprising to see Chinese miners coming to that country.
How much boost do you think this can add to the economy?
Well, it's substantial, because not just the fact that Bitcoin miners are coming, definitely, you know, the fact that it's also going to allow a lot of crypto entities into that country, that systemically could create trade activity. And interestingly, you know, the Chinese government have also increased their uptick around Ethiopian infrastructure. So definitely that would increase positivity in that space.
Well, we don't see them coming to Nigeria anytime soon. We have enough on our hands, Shay.
I think Nigeria has its own prospect too. This is Africa's largest market, and despite the fact that we have some geopolitical and infrastructure concerns, I think a lot of top labels are not putting Nigeria on the sideline. So it's just a time of win, and I think the Security Exchange Commission has done a wonderful job setting a regulatory timeline and framework on how crypto entities that want to set businesses can. So I think we are moving on the right step. It's just that the infrastructure development, electricity, and the rule of law needs to be head on for us to get to the optimal level of many of our competitors.
All right, so Lumina Additional, thank you so much for your time this afternoon.
Thank you for having me.
Okay, so with that, whether the Chinese miners are here or not, we still have our markets, you know, the FX and the NGX. But that's where we draw the curtains on Business Incorporated today. Do remember you can watch the program at any time. If you missed out on any information, you go to youtube.com/channels web. I'm Ini John Michael. I'll see you again tomorrow. God's grace. Bye-bye.